Good afternoon. Time to wrap it up for December the 16th, 2014. This morning we wanted to get short once to see if we could take out the overnight session low down here at 62. Our guess was that we would have a pause day and short covering would dominate the trading. So the short actually came before the day session opened up in here in this area. The market did make it down and was not able to break 68. After that, it was pretty much all buying. We had one short here, a legitimate setup, had 3 bars to scratch the trade, take a small loss. We had another sell right here, legitimate setup. You had 5 to 8 bars to make up your mind on a short right there. Then the market goes up, and then here was your third short that set up right there. And that produced a pretty nice winning trade. Hour ago we updated. We said we thought that the market would probably close in the 87 area. The spill out from crude oil is going around the globe. Middle Eastern stock markets, Russia, the ruble has stopped trading. A French bank, a Societe Generale, and then an Austrian bank are in trouble. Their stocks have plummeted. Societe Generale regularly gets bailouts from the French taxpayer, and it looks like there may be another one in the offing. They take fairly risky loans because there is no risk to the bank. The French taxpayers pick it up. And if you hit the home run, you get pretty nice bonuses. That's the way it's going to be in the United States now. These banks are too large to fail. None of the people that got their banks in trouble in 2008 have been punished. In fact, they got bonuses for that kind of work. So it's the way it is. If you are connected to the government directly like that, life can be pretty good and with very little accountability involved too. So that's the way our banking system has I guess slipped or fallen into these days. So here we are. We've got volume right here. My guess is we're still going to hold. But one of the things that I want new people and people visiting, just because I say I'm a seller here or a buyer here, it requires a setup. And so right here, there's a legitimate buy. We did not take out the low. It produced a small winner. Right here's a legitimate sell. Probably at best a scratch, perhaps a small loss. Market makes a new high here. We do get a retest here. There's a legitimate sell. Doesn't go anywhere. Here's a legitimate buy. And because the market is trading up, that's the better trade. Another legitimate buy. Legitimate sell. We're making new lows. We're making new lows. Right here we have a retest. Don't have a buy underneath this. Market trades up, another legitimate sell, another legitimate sell. So let the software do a lot of the work for you. We've spent a lot of time looking at what creates a valid trade setup, what trades can make you money, and don't ignore that kind of work. You don't catch every trade, you don't get the tops, you don't get the bottoms, but you certainly don't get chopped up, or you don't stick your neck out and take trades after a market has trended up or down that really aren't set up for that effect. So what will we face tomorrow? Looking at our F1 screen, we got a lower high and a lower low. My guess is we're probably going to have to retest this 65-70 area right in here. If the price of crude oil starts to sell again overnight, that would be our first clue or indication that it's going to go that way. So we like the sell side of the market. We've got support at 60, 62. Then again in this 75 area right in here. So 75 and then 60, 62 is where we anticipate support. But we want to get short to see if we can take those levels out. And if we can't, we're probably going to look at, remember stage 1 of development. 2, find a price that cuts off the selling. And 3, development, so perhaps development in this 90 area right here. And again, I'm anticipating. You got to think ahead. You've got to look over the horizon. Tomorrow we have CPI. Nobody's paying attention to it because the Fed is not raising interest rates to fight inflation. Core. Plus a tenth. CPI minus a tenth. Current account balance. Minus 95B, that's $1 trillion a year. That's the hole that we're digging, and continue to dig, and no one can stop it. Nobody's voting against it. And you know, the best investment in the world that you can make, the one with the highest return on investment, is buying off the U.S. Congress for its tenths of pennies for millions of dollars in return for some of those people. Never more than a nickel or a dime for returns. You know, for a turn of $1. So it's the best game in town if you can get into it. Then we have crude inventories and then FOMC. FOMC tends to hold the market in a trading range, and that's what if it doesn't break early, that's what I would expect. Looking at the F2 screen. And again, for those of you that are new to the room, notice that we do our analysis the same way every time. It just does not change. I'm going to compress the trading range so we can see it. And I would imagine we got one shot to break it early, and if that doesn't happen, then I'd look for a trading range, basically trading that 85 to 90 area as we run into the FOMC. So right here, we definitely have rejected prices below 67.50 and perhaps below 73. So first band of support is in this 73.75 area. So that'll be buy 1. And then our 65, 67, let them get stops beneath that for buy 2. Now I prefer the short side first. See if we can take out the overnight sessions low or today's low or yesterday, or the overnight session low from last night. On the sell side, based on where we are right now, 89 to 91, which happened to be, I believe, our number 2 sell point this morning, and then 99 to 2001 for sell 2. Don't think the news would be much of a factor. Okay, looking at the note, FOMC usually has a bigger impact on the trading and the financials. It almost always kills it. We've got a higher low, higher high. The screen tells us that we're buyers. Now, for those of you that are new and visiting the room, you know, how in the hell can somebody come in and draw this inference that a higher low and a higher high on a daily bar chart says higher? Well, we got something else going for us. We got volume down here, these red lines. See volume here, volume is here, volume is moving higher in each of the distributions. And a higher high, I mean a higher low than the preceding day, means that somebody wanted to get long against that number. There was no selling against that number the first time up it went up. So the easiest way for this market to move is up. And that probably won't change. If you look at the news coming out of Russia, if you look at the news coming out of the Middle East, I mean, you talk about chaos accelerating around the globe. It is, and so that tends to make people want to buy and own treasuries. Looking at the F2 screen, kind of a saddle formation. We thought the market might close in the 24 area, 23. We identified 21. I think the official day session close was 21. And we made that call an hour before it happened. And you can do that with the for the profile, high volume, low volume numbers, etc. Learn to read the profile for one market. You can read the profile for any market. Then you need to know if it's a go with market or if it's a responsive market. Then you need to know the average rotation between pivot highs and pivot lows, and then you can apply your trading plan. Our basic trading plan is based on retest failure for market markets, setback trades for trending markets, mean green trades for retracement, and market that's moving directionally. You are making a directional call and exhaustion bar trades. Our profile trades, open in value, open out of value, open out of value, move back into value. So you've got 7 basic trades that you can trade off that webinar that I did before we had it out. So here we are. The close was at 21. Last rotate up was at 24. FOMC tomorrow. So my guess, without some big help from the E-mini, is that sell 1 is going to be 23 to 27. Second sell will be 31 to 03. And again, short covering in the E-mini is probably the biggest dynamic that we'll face. 13 to 17 buy 1. 5 to 9 buy 2. My guess is we're probably going to find support at 16 and resistance somewhere between 24 and 28. Just based on FOMC, where no change is expected. Onto the ZB. Pause it there momentarily. Had a frog in my throat. Imagine. I tell you what, coming back from the beach, didn't use hand creams or lotion once. That high humidity, warm air does make a difference, and no coughs or anything like that due to dry weather, warm temperatures, and didn't take long to figure out here in Wichita. We're back to highs in the 40s and winter weather. It is that time of year. Okay, the knob spread is stronger, and we're dealing with a stronger profile here, and that favors higher prices, or at least a retest. So this 3 to 7 area will be sell 1, and then 15 to 19 will be sell 2. I think the FOMC meeting holds everything in check. We'll try to pick up this area right here. We know we've rejected prices above 6. That's rejection. That's the price that cut off the buying. And you can see it was sold on the opening because prices were too high. On the buy side, last rotate down was 24. We're at 30. Then down to 18. So I'm going to make 17 to 21 buy 1. And buy 2 will be 9 to 13. FOMC tomorrow, no changes to be made. They'll be looking for language as to when they're going to start raising interest rates. Based on what's going on in the world, inflation has once again been held at bay. And inflation hasn't been the problem since 2008. It has been deflation, and they're still fighting deflation. And they're not creating jobs. They're not creating the conditions right to fight deflation. What they're doing are creating conditions that are ripe for us, for traders, for financial people. All the liquidity in the world. So you don't have collapses due to the lack of liquidity, but you don't have money going into the productive side of the economy because people are justifiably concerned about the future. They want something liquid. They're not going to build a new factory. They're not going to put a shopping center up or anything like that. They want something. They already have enough real estate. They already have enough of those other type of holdings. So they want something that's more liquid, and that's what we do. Okay, we're at 94. First sell is going to be 90 to 1200. Basically selling against 1200, then 5 to 7 for sell 2. I think this market will be on hold until the Fed announces no change. Again, crude oil, ES, to the rest of the markets. Same thing in gold. 90, 92 buy 1, and buy 2, 85, 87. The terrorist attacks around the globe seem to be accelerating. The Taliban hit them in Pakistan. We just got through with an Australian one. It started in Canada. In North America, it's not talked about in our press, but there have been several, quote-unquote, lone wolf attacks in the United States where people have been killed as Muslim wannabe terrorists pick up their weapons and go kill Americans. It's not, the press doesn't talk about it, but it's here on our continent too. And Pakistan has cut a deal with the devil. The Taliban, they've kept them in power. They've backed them, and every now and then Pakistan gets burned by these people. And that's not going to change. Not going to change. So here we are basically at 56. We got a seller at 57. We have a buyer below 54. So that's a $3 range. It's normally what crude trades in. You can see right here, this area is held off. We expect highs or the end of the move of the day session in the ERF period. We got it here. The market pretty much was straight up. You can see that we got a seller above 57, and you can see that actually the buying has picked up against this 55.50, and here we are at 56. So we'll make 55, 55 and a quarter buy 1. We'll play for 57, $2 down to 55. We'll make 56.50 to 75. Sell 1, 57, 57 and a quarter, sell 2. And on the second buy, we'll make 54 and a quarter, 54.25. And last but not least, the euro. The euro has rallied off the problems in Russia, off of lower crude oil and better than forecast economic numbers for Germany and the EU. Germany has officially missed being thrown into a recession. They had 0.1% growth on the last report. So you can see right here that we have a pretty clean break in the market in this 12.95, basically 125 even. Volume is high in this particular distribution, or matched with time. We rejected prices below 24.90. It's a B, so let's make 75.85. Let them get stops down here. Buy 1, and then 50 plus or minus, buy 2. FOMC tomorrow probably is going to hold us in a range. On the sell side, we'll make 30 to 40, sell 1. And then 60 to 70, sell 2. And we'll leave it at that. The FOMC unchanged. I don't think it'll have a lot of impact. If it is unchanged on anything, they'll be looking for language as to when will they be raising interest rates. And the Fed knows, and they'll be debating vigorously over nuanced words to include in the write-ups. So there you have it, December the 16th, 2016. I'll see y'all bright and early in the morning.